But it might just do that over the next week or so. But after that, I think the credit policy would be sort of haunting the market, as it were. And if the hawkish policy statements of the Reserve Bank is anything to go by, they'll have to convert it to some action, maybe some small CRR hike or something like that. And that can put paid to the sort of bullishness in the market for the time being at least.
So you think the near-term top is somewhere between 53, 5400, not significantly more than that?
I don't think it can be significantly more than that, because I don't think the fundamentals really warrant that. Except that, of course, there's a huge surge of inflows that continues, whatever, $17.5 billion in calendar 2009. So if that continues, which is not something that you can sort of wish away, because because of zero interest rate policy in the US and also infinite liquidity available in the OECD countries, I think the money would keep coming in. But of course, there's this huge lineup of IPOs and divestments and QIPs and the like. So therefore, it's not as if even if the money comes, it's going to influence the direction of the market quite dramatically, unless it comes in big bouts in very short periods. But otherwise, I think most of this would be absorbed by the new issuance. So therefore, net it might not have too much of an effect on the market, taking it beyond 5,300 in any meaningful way.
If it does correct for the reasons that you mentioned, do you think it will be just a shallow correction, more by way of a sideways drift, or a significant correction? Because a dip to 5,000, 5,100 is not a meaningful correction. Do you think a dip to 47, 4,800 is likely in the next few weeks?
I think that is possible only if the budget also disappoints, which is a possibility given the state of the fisc in India. I think they will have to probably withdraw some of the sort of measures that they had given, the incentives that they had given earlier, especially excise and service tax and stuff like that. So if that happens, I think market could see the sort of levels that you mentioned, 4,700, 4,750. But unless you have very firm indications that this is going to be the way the budget is going to respond to these events elsewhere, events in the world and events in India, and also the inflation situation, till then I think the market would probably tend to believe that the best is so the worst is not really there, and the budget would come out with something better than the worst expectations.
So you would say that a post-budget dip rather than a meaningful pre-budget dip is more likely from where you stand?
Well, a post-budget dip, if the fiscal incentives are withdrawn, I think is quite a possibility. But even in the run-up to the budget, unlike in the past, if there is not so much of a build-up in terms of expectations, the correction can happen even in the run-up to the budget.
Just a quick word on earnings season. The one sector which flags off earnings season, which is not expected to be too bad, is technology. But curiously, most of the frontline technology stocks have corrected for the last 3 days. What's the market pricing in?
Market is pricing in, of course, an appreciation of the rupee, so therefore there will be some impact in terms of rupee earnings of these companies. Plus, of course, you have a situation where we are really talking of very anemic quarter-on-quarter growth, low single-digit number growth in earnings, if at all. But of course, on year-on-year, it might look much better, largely because the corresponding quarter last year was quite bad. So I think the market has had a very good sanguine view of IT companies for quite some time now, and now I think they realize that the rupee appreciation is going to eat into their profits in a significant way, and also the fact that there is not really any return of pricing power by these companies. It is just that there is a certain improvement from the worst that we have seen, but return to pricing power is really some time away.
So you think stocks like Infi, TCS and even Wipro and HCL Tech should not see any further valuation expansion from where they have reached already over the last 6 months?
I don't see anything significant happening on that side, but it might actually the prices may be maintained if at best if the results are good. But I don't see a huge jump in prices just because the quarterly results show anemic quarter-on-quarter growth.
But what about banking? You spoke about possible monetary tightening down the road in the next few weeks. Do you think banks will underperform in this period, or has this news fully been priced into the banking sector stocks?
Well, I think the banking sector stocks are not likely to do very well, largely because this quarter results might not be very good because one is there's hardly any treasury income, the 10-year gilt yields have gone up during the quarter. Plus, again, credit growth has not been there. So we don't expect banking to really be at the forefront of any sort of appreciation in the market that could be there. But I think unless credit growth starts happening and unless at least some of the monetary tightening measures are behind us, there is not really much of a hope in terms of great performance from the banking sector in the short term.
What about the other interest rate sensitives then? Autos, which have shown some cracks over the last 1 week or so after the news from the Auto Expo. Would you be cautious with valuations there, or do you expect them to continue to outperform?
In the short term, I think this quarter results might be good because the numbers have been extremely good for the last few months. But I think at some stage you will find that autos have had their fill. And for the next 1 year, if you really see, I don't think autos are the sort of sectors that you should be really betting on. But they've had a very good 1 year. 2009 has been extremely good, and even this quarter even the December quarter results might be as good as expectations, if nothing else.
Bhatt, what's the general sense you're getting on flows as the new year has opened up? Are people cautious from the anecdotal evidence that you hear of from these levels, or is there still a lot of inclination to buy more of emerging market equities?
Well, I think the flow towards emerging markets is something that is sort of secular because of fundamental factors. The health of the emerging markets of the economies are much better than that of the developed economies. You have basically the larger emerging economy countries are the biggest creditors to the OECD countries. So therefore, I think, and of course the growth is where the emerging market countries are. So therefore, I think the flows would continue, and as long as the zero interest policy and the sort of infinite liquidity situation continues in the US, I think emerging market flows would continue very strongly. It is just that quite a lot of new issuances are there, so therefore new issuances could absorb quite a lot of these inflows, and therefore the market might not really see the full effect of those inflows.
Do you see this mid-cap outperformance, which has characterized the market for the last few weeks, continuing through the first quarter of 2010?
Well, I think that could continue because there has been already a significant outperformance, but now with the pivotals being reasonably stretched valuations, having reached stretched valuation levels, I think people are looking at pockets of value elsewhere, and that is why you are seeing mid and small caps outperforming the large caps. But if there is a correction, I mean, as usual, I think the mid caps and small caps will get hammered much more in relation to the large caps.